What is up, everybody? Welcome back to Bitcoin and Markets. Hope you guys are having a good Friday and you're ready for the weekend. Thought I'd live stream and go over a piece that I wrote yesterday for Bitcoin Magazine Pro. The more I think about it, the more I think that we are on the cusp of a major realignment. When you're zoomed into a specific topic or a specific community, you can't see the major changes happening. And I think the last 7 to 14 days, there has been some major realignment going on in Bitcoin. So I wanted to discuss that piece that I wrote. Let's jump right into it. First and foremost, check out bitcoinandmarkets.com. That's the website that you can get all my content other than the Bitcoin Magazine Pro, all of my Bitcoin and Markets content. I did put out this one a couple days ago for the premium members, a full Bitcoin update with all the different charts and stuff. And emerging fundamentals. And while I was writing that, I got the idea to write this one for Bitcoin Magazine Pro. So if you guys check out bmpro.substack.com, that's where I do the writing for them. And here is this post. We aren't bullish enough. Monumental shift in Bitcoin's fundamentals. I should have said realignment here after I thought about it. That's a better word. But let's dive into it. This is a paid piece, so I would appreciate if you guys aren't subscribed, go over there and subscribe to Bitcoin Magazine Pro. It's worth it. The stuff that I put out on there is very high signal, if I would say so myself, because we talk about this type of stuff. We also talk about all the mining metrics. We talk about all of the market metrics with using a spreadsheet and collecting a bunch of data and talking through it. So check out bmpro.substack.com. All right. So we're witnessing a massive realignment of fundamentals. Where they formerly fought us, now they join us. For years, Bitcoiners have been fighting a seemingly uphill battle with the powers that be. Resistance varied from country to country. Discriminatory regulations. We've seen that obviously in the United States. With mixing services and with tax treatment, back and forth, flip-flopping on tax treatment, all sorts of stuff with money transmitters. And so, yeah, we have discriminatory regulations. We also have billionaire investors spreading FUD, right? Like rat poison from Charlie Munger. Called it rat poison. And, for years and years, it was just FUD by the mainstream investor class. It was pure FUD from or about Bitcoin. There have also been arrests, of course, free Ross Ulbricht and these guys from Samurai and all the other people that are facing charges for this type of free speech. But anyway, yeah, they've fought us with arrests and outright bans on mining and trading, like in China, right? However, the power dynamic has now shifted, or it is in the process of shifting right now. The shift started in 2023 with BlackRock's application for a spot Bitcoin ETF, a company often associated with corruption and elite conspiracies. So for years, I mean, this is still, if you go on to a lot of kind of alternative financial website, YouTube channels, this is one of their favorite conspiracies, BlackRock and Vanguard owning everything. Of course, it's the clients of these people that own everything. They did have some connection with ESG, pushing ESG, which is a scam. But that has all pretty much wrapped up. I think all but 3 ESG ETFs are wrapping up. They're going out of business. So ESG as a idea is kind of over with. But anyway, BlackRock joined the team in June of 2023 in a fundamental shift. That's when the shift started. Now, you can like them or hate them, but Bitcoin's incentives work on everybody. So, of course, bad people are going to use Bitcoin, but good people are going to use Bitcoin too. Bitcoin's incentives work on everybody, just like gold's incentives or any money. Criminals, bad people, we'll put it that way, have to use money just like everyone else. So it's going to work on everybody the same. However, what is important about BlackRock is the monumental shift of the powers that be fighting Bitcoin and now joining Bitcoin. So while Bitcoin's incentives eventually work on everyone, it was mildly surprising and seemingly out of the blue that BlackRock wanted to promote Bitcoin. We don't have to like our new promoters, but Bitcoin has new friends in high places. And this week we glimpse the massive scale of this shift. After weeks of calm and a contained Bitcoin price, the last few days have brought far-reaching changes to Bitcoin's fundamentals, from ETF inflows to significant institutional endorsements. The bullish momentum is unmistakable. In this post, we delve into recent events shaping Bitcoin's landscape and why the bullish sentiment might still be underappreciated. And here is this chart, 50-day moving average. We broke up above that yesterday when I was writing. And let's go to a live chart, actually. Get the real deal here. And we can bring up the 50-day moving average, zoom in. We tested it, going back down, could not close below the 50-day moving average. So the bears, trying to save some of their liquidations and stuff, could not push the price back below the 50-day moving average. And we rocketed up again to a new high again today. So this is a big breakout for Bitcoin. All right, back to the post here. So that was that. Bitcoin surged over 7%, breaking through the 50-day moving average. We talked about that, cementing the bottom on May 1st. This rally was a result of a confluence of events sparked by April's CPI data coming in under forecast for the first time in months. However, the narrative is much broader and more bullish than just a single economic data point. Institutional involvement. 13F filings reveal major positions. One of the most significant shifts in fundamentals was revealed by the recent wave of 13F filings from major institutions and funds reporting Bitcoin ETF positions just before the May 15th deadline. And I think the number came out. I didn't know the total number when I was writing this, but I think it was 935 entities that are required to file 13Fs. And I think who's required to file 13Fs? Let me look that up. Who is to file 13F? I think it's 100 million. Yes. If the fund, the investment fund, has at least 100 million in assets under management, they had to file 13F. So this isn't all of them. 935, that's just the big guys. 935 big guys that have filed that they now own Bitcoin. All right. They detail substantial allocations into Bitcoin ETFs by major institutional investors. The significance of these filings cannot be overstated. The list of participants is lengthy. UBS, Bank of Montreal, Scotiabank, Toronto Dominion, US Bank Corp, and this is a Rothschild firm. Apparently, it's a Rothschild bank. But they only have, it's a very, very small stake, I think 20 million or something. BlackRock, Millennium Management, they're the third largest hedge fund. Bracebridge Capital, Hightower Advisors, the second largest firm of its kind in the U.S. Cambridge Investment Research, Sequoia Financial Advisors, Integrated Advisors, Brown Advisory, Pine Ridge Advisors, Booth Bay Fund Management, and even the state of Wisconsin. And we did get some more here. So let me go to my Twitter account and see what we got. Not that. Where was it? I just shared it with Telegram. Oh, this video is hilarious. Dang. So I don't know what happened to that. Let me check Telegram, see if I can pull this up some other way. I'll search for it. Sorry, guys. Yeah, here it is. Okay. So this post is from Sam Baker, and it's the Bitcoin ETF exposure for the top 25 hedge funds. And actually, he says the majority of, oh, I thought he said 100, but anyway, top 25 hedge funds. And look at all these that bought in. Millennium Management, 27,000 BTC. So this is very, very significant. All right, back to the post. Hedge fund Millennium Management, with over 64 billion in assets under management, disclosed holding approximately 2 billion, or over 3% of their assets under management, across several Bitcoin ETFs. Other notable allocations include Bracebridge. Okay, we covered that. Wisconsin was the biggest surprise in the filings, as a government pension fund allocating 0.5% of their portfolio to Bitcoin. So yeah, this is much smaller than the 3%, which let's just talk about the 3% for a second. That is huge. Huge. A lot of people were talking about 1%. If Bitcoin just got 1% of all the investments, yada, yada, yada. But this is 3%. That is a huge, huge number. And Wisconsin dipping their toe in at 0.5%. What happens when Bitcoin doubles here in the next couple months? It's going to be 1% of their portfolio. So big, big numbers. Other pension funds, endowments, and sovereign wealth funds will likely follow, especially considering earlier this month, BlackRock announced talks with these types of investors. And let me just open this in a new tab. Go here. Where am I at? Yeah, that's right. BlackRock sees sovereign wealth funds pensions coming to Bitcoin. They've been educating pension funds, endowments, and sovereign wealth funds about the new spot Bitcoin ETFs. So this is going to continue to accelerate. All right, according to Matt Hogan, CIO of Bitwise, this list is just the beginning, with many professional investors expecting to increase their holdings significantly over the next 6 to 12 months. Hogan noted that the pattern of due diligence typically leads to broader platform-wide allocations, dramatically increasing Bitcoin's potential institutional investor base. Hogan suggested the number of 13Fs with Bitcoin could rise to 700 plus firms in the next filing deadline. Well, it already surpassed that, 935 in the first filing deadline. Hogan highlighted that Bitcoin ETFs far surpassed the earlier performance of the gold ETF in 2004. So I also saw another thing, that in the first filing deadline for the gold ETFs back in 2004, they only had 95 people investing in the gold ETFs. We almost 10x that with Bitcoin. Okay, so the main thing here is all of these people that have fudded Bitcoin forever, they were on the other side of Bitcoin. We could not consider them in the Bitcoin camp. Now they are. See the gigantic realignment that's going on here? It's massive. All right, let me increase that for you guys. Okay, so on to the next section. ETF inflows and the Veblen good effect. All of those 13F filings were for Q1 flows into the ETFs. How do they affect current flows? We might already be seeing the beginnings of this second wave of ETF buyers. After flows have been negative for 10 of the last 13 days, each day this week has been a positive flow day. And I think, let me check yesterday. I think yesterday was also positive, but yes, yesterday was also positive. So if I bring this up, 66 million, 101 million, and 303 million. And then yesterday was 257 million. So you can see that this is a drastic change after all of the 13F filings. So first comes the 13F filings, then comes these other positive inflows, because people saw those 13F filings and they're racing to join them. All right. Bitcoin exhibits a unique relationship with price that differentiates it from typical goods. In the case of most goods, demand decreases as price rises. However, Bitcoin behaves like a Veblen good. where demand actually increases as the price rises. This phenomenon is crucial in understanding the potential impact of the recent 13F filings, revealing large, well respected firms allocating to Bitcoin, and states even. So all these 13F filings come out. Everybody sees, oh my God, half of the top hedge funds are now invested in Bitcoin. The other half are going to be invested pretty soon. Pension funds, they see Wisconsin, it's the ninth largest in the country. Or is it in the world? I think I put that up here. It is the ninth largest in the country, pension fund. And they're in it because they filed a 13F. Now everyone's going to jump in. The investors and amounts disclosed in the 13Fs are likely to spark inflows, which will tip the price higher and begin an upward spiral for Bitcoin. As major companies publicly reveal their substantial Bitcoin holdings, other large investors reevaluate their positions. Seeing respected institutions allocate to Bitcoin can lean the internal due diligence process of other firms in favor of making similar investments. This causes the price of Bitcoin to rise, which in turn convinces yet more allocators to buy Bitcoin, thus creating a self-reinforcing cycle. It's a cycle, a Veblen good cycle. As price goes up, demand goes up. This powerful feedback loop is a price inflow spiral that can lead to significant price movements for Bitcoin. As we move into the second half of Q2, this dynamic is likely to play a crucial role in shaping Bitcoin's market trajectory, driven by these institutional endorsements and the inherent Veblen good characteristics of Bitcoin. So, where are we at with the realignment? Whole topic, okay? Our previous enemies are now our biggest supporters, our biggest buyers. And as people start seeing that these large, well-respected firms are allocating to Bitcoin, it's going to kick off a price spiral. All right, next section, government support for Bitcoin and stablecoins. The regulatory landscape for Bitcoin is shifting dramatically. A total political realignment is happening as we speak in favor of Bitcoin. Important line here. Political realignment. In Staff Accounting Bulletin 121, or SAB 121 for short, in a very strange guidance, the SEC banned banks from custodying Bitcoin. And this is back, I think it was like July of 23, maybe, or it could be as far back as 2022, but it's not like immediately recent history. This has been for a while that this guidance has been out. Congress took it up now, and you guys, of course, have probably heard about this, and they passed a measure in the House and Senate to rescind this guidance. So banks will be able to custody Bitcoin now and provide Bitcoin services. Biden has threatened to veto it, but vetoing a bipartisan bill in an election year would be contentious. Even the Democrat head of the Senate voted for this. This had wide bipartisan support. There's something like 25 million Bitcoiners in the United States. It would probably be political suicide if he vetoed this. If signed, it could open the floodgates for pent-up demand. Hold on, I have a screen issue here. Okay, and I'll maximize that. Floodgates of pent-up demand from banks to offer Bitcoin services. In a similar story of the government surprisingly protecting people's rights, Oklahoma has passed a law protecting the right to own, transact, and personally hold Bitcoin. I don't know if you guys saw this. I know the guys on Telegram saw this because I shared that a couple days ago. The vote was a surprising 76-2 to pass it, to make it so you can always own, transact, and hold your Bitcoin. 76-2. This could be followed soon by other states such as Montana, Idaho, Wyoming, Texas, Tennessee, Florida. Those are just the ones off the top of my head that would be friendly towards this. Similar state law. So, watershed moment. Watershed moment. Such laws safeguard Bitcoin holders from government overreach into their privacy and personal finances. Additionally, on the legislative front, Paul Ryan, a prominent establishment Republican and former Speaker of the House, suggested in an interview that stablecoin legitimization could happen within the year. He explained the benefits of stablecoins holding dollar-denominated assets like government bonds and further entrenching the dollar in the global digital economy. I was like, wow, this is a 180 here on stablecoins as well. So not only do we have the 180 of, the biggest enemies are now Bitcoin's friends, to the government now completely supporting and going in favor of Bitcoin, from the House and the Senate passing to rescind the SEC guidance for banks, to Oklahoma becoming a precedent for other states to safeguard our rights to custody and transact and own Bitcoin. And also now Paul Ryan, who is a he's a big shot in the Beltway. And he is saying that stablecoins are good. Stablecoin legitimization is good for Bitcoin. Ryan distinguished stablecoins and crypto. He said, stablecoins are not crypto. He said pretty much those exact words. Something that could be expanded to Bitcoin since the SEC considers it to be the only commodity in the space. Tether is also fully committed to increasing their Bitcoin reserves and Bitcoin mining, expand their Bitcoin mining operations. If they can expand their circulating supply and revenue, they will have more money to stack Bitcoin reserves. So I think, what are they at? Around 100 billion for circulating supply of Tether. If they went to 1 trillion, they would be holding all these government bonds that are paying interest. They would be holding all this corporate paper that's paying interest. They're making money hand over fist off of their fully backed reserves, and they're going to be dumping it into Bitcoin. So it's net positive for Bitcoin. It's if this happens, it's very bad for the euro. It's very bad for the yen and the yuan. The dollar is going to be entrenched everywhere. And all those people that are holding euros and holding yen, they're going to want to flee into something like Bitcoin. So this is good. This is very net positive for Bitcoin as well. But anyway, okay, so that is the legislative front. And now onto the altcoin front, which I think is still important. But anyway, so the Ethereum bleed. The last major fundamental shift I'd like to discuss today is the slow decline of Ethereum. The token's troubles have been widely discussed on Twitter over the past couple of weeks. In a recent filing, the SEC alluded to the fact that the Ethereum ETFs applied under the wrong rule. They applied for a commodity-backed ETF, implying they should have applied for a security-backed ETF. So here I just have this image. Oh man, that is really small. Let's see if I can. Oh, I have to share that tab instead. Let's see if I can make it bigger. Given the nature of the underlying assets held by the trust, has the exchange properly filed its proposal to list and trade the shares under NASDAQ rule, blah, 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 commodity-based trust shares? So you can see they're questioning if they even filed under the right rule, being a commodity rule. Oh, man. Close the tab and didn't have anything else selected. Okay. So we're back here. Such a reclassification would create substantial uncertainty for Ethereum, exacerbating its downward spiral. It could lead to capital flight from ETH to BTC. And that's big because what's ETH's market cap? Something like 400 or 500 billion, something like that. And a lot of that is going to succumb to capital flight out of Ethereum. And if they're going to make Ethereum a unregistered security, they're going to make everything else an unregistered security except for Bitcoin. So Bitcoin's clear regulatory status as a commodity is the best alternative. Investors fleeing Ethereum are likely to seek refuge in Bitcoin, driving up demand and further fueling the positive feedback loop discussed earlier. The migration of billions of dollars in capital from Ethereum to Bitcoin will not only bolster Bitcoin's price, but will also unequivocally cement its status as the only viable digital asset. So this is big for Bitcoin, in my opinion. If Ethereum goes down, continues to slide, not only will capital flee into Bitcoin, but it will shut the door on all of the Bitcoin affinity scams that are going on with altcoins. We're like Bitcoin, but better. We do this differently than Bitcoin. We are just like Bitcoin, but better. And, that has been a scam that needs to die. I don't think that altcoins will ever die completely, but they will be seen as penny stocks. They won't be seen as actual legitimate investment vehicles. They'll be seen just like going to the casino sort of thing. All right, so here is this image. This is when it all started going downhill, when they started burning fees. And I don't know if you guys remember me talking about this before, but 1559, when they started burning the fees, they shut off the inflationary stimulus to the Ponzi ecosystem. So all of these Ponzi ecosystems, they were, you would launch an ICO and you would buy these other tokens with Ethereum. Okay. And the Ethereum inflation rate is what leaked down and created the basis for all these other Ponzi's that were built on top of Ethereum. Once they started burning fees and becoming ultrasound money, that inflationary stimulus dried up. And then proof of stake starts. What happens then? The tokens go into proof of stake and they don't circulate. So not only are you cutting off the inflationary stimulus, you're also sucking tokens out of the economy and into proof of stake. Two really, really bad things for any sort of growing economy. If you want to grow your economy, that's not the way to do it. Then they had, even the ETH futures could not bring it back. And now this most recent hard fork that they had, Deacon, it just came right before a big sell-off. So nothing they're doing is working. And if you look at this chart, what's to make you think that anything is like imminently going to change? They've thrown everything at the wall. They've created all this technical debt and economic debt. Like the economics of their network is so twisted at this point that there's no way they can get out of it. It's just going to continue to slide and degrade. All right. Conclusion. The past week has been transformative for Bitcoin fundamentals. We are no longer fighting an uphill battle. Major capital allocators are flocking to Bitcoin. Official disclosures are spurring demand. Governments are passing supportive laws. And a longtime rival is declining. We are not bullish enough. As institutional interest grows and regulatory treatment improves, Bitcoin's position as a key asset in the global financial system is becoming increasingly solidified. All right, so that was that post. Hope you guys liked it. Check out bmpro.substack.com, and I am going to take a look at the chat. Atlanta Girl, it is bmpro.substack.com to sign up for Bitcoin Magazine Pro. Okay, let me check Telegram, see if there's any comments. Guys, I am live streaming on YouTube, Rumble, Twitter, and Telegram. So you guys can check out any of those spots. Telegram, no comments here. All right. Still getting used to live streaming. I don't usually go out on Twitter because I don't know. I just don't like that it's from my back end that I'm using here, my streaming platform. I don't get any updates at all from Twitter. I can't see anything that's going on there. and I don't want to have like 15 different windows open. So, um, yeah, I usually don't do that. But check out YouTube and Rumble, subscribe, comment down below. All right. If no other comments are coming through, I'm going to call this one a day. You guys have yourself a great weekend. Get outside, touch the grass, spend time with friends and family. That's what's really important. Even though Bitcoin is probably going to be pumping here over the next couple of weeks, what's really important is family and friends. So get outside, enjoy the summer. It's almost the end of school, or maybe it's the end of school some places. Get out there, spend time with your kids outside, play some catch, do something like that. And I hope you guys enjoy the weekend. All right. See you on the next one.